Hi, this is Dave Corsi with the Liberty Action Network. Tonight we will be speaking with Paul Mladjenovich. Paul is an author as well as a capitalist, which is a beautiful combination. Paul is the author of several books such as Stock Market Investing for Dummies, Micro Entrepreneurship for Dummies, and he is also has his own website, theravingcapitalist.com. Paul, welcome.
Good to be on your program, Dave. This is a phenomenal program to be on.
Well, great to have you. And tonight we're going to be talking about a lot of economic issues which are of great importance for the future of our country. Paul, we always hear the phrases the national debt and the national deficit. A lot of people seem to be confused about what they both mean. Could you explain the difference between the two?
No, exactly. First of all the deficit really is the shortage in a typical annual budget. For example, if you're spending $4 trillion, but you're only taking in tax revenue of $3 trillion, then you have a deficit of $1 trillion. Okay? So that's deficits, right? Just like when we have budgets. You know, when we say that you don't have enough money to cover what we're spending for the month, you know, or whatever for the year. And all the national debt is the accumulated deficits over many decades. So we're at the point now we're hovering around 17 trillion, and that keeps on growing.
Okay, so the debt in effect is for the 1 year, and you accumulate all those debts together, and you end up with the deficit.
No, the deficit is for the 1 year.
I'm sorry.
Okay, the deficit for the 1 year,
right.
And national debt means when you accumulate all those deficits, because that's where's the money coming from? If you're spending $4 trillion and you're taking in $3 trillion, where's that $1 trillion coming from? This is where you're borrowing money.
Right.
And we're borrowing money, what the federal government is borrowing from both internationally and locally, investors, the Federal Reserve, and the cumulative amount is all national debt. And this is what we have to be facing right now, and that's a growing number.
Okay. Another term we're constantly hearing now is Ben Bernanke's quantitative easing. I find most people aren't aware exactly what quantitative easing means. Could you shed some light on that?
Well, quantitative easing, really all that really is just, hate to put it this way, but a newfangled term for really just printing up more money, you know, and issuing debt basically. So the Federal Reserve is basically America's central bank, and they're in charge of creating money, basically, whether they're printing the way they used to or digital printing as we're doing now with a few keystrokes. And so when you're talking about quantitative easing, you're talking about them printing up more money, and this money is then filters through our economy. It's both headed towards the federal government, and it heads through the banking system, you know, towards money center banks, and then it's utilized. I mean, you're hoping it's being utilized to grow the economy, but in many instances what it's being done is to finance the deficits again, growing the debt, okay? But in addition, the money is also filtering through to places like the financial markets, such as the stock market. Right.
Okay, so in effect, it'd be kind of creating a form of inflation because we have all this money being thrown into the economy, and which tends to make prices rise.
Well, here's the thing about that, because many people think that when you're printing up the money,
right,
that ends up in inflation, which is very true, because really inflation is when you're expanding the money supply. When you have more dollars chasing a finite, say, a basket of goods and services, you're going to have inflation. Now, in recent years, a lot of people have made the observation, you know, it looks like the prices haven't gone up that much. How come there isn't rampant inflation? Why isn't like goods and services, those prices rising, say, dramatically? Because keep in mind, what makes prices rise is certainly when you expand the money supply, but the second thing is where is that money flowing, okay? Like in economics, you have a term like velocity. I mean, how fast is the money moving and where is it going? But really, in recent years, over actually last 10, 15 years, much of that money has not been going into the price of goods and services. It's been flowing through the banking system into inflating assets. Remember, we had the housing bubble, we had the internet bubble, right. And in the last 6, 12, 18 months, you've seen brand new stock market highs. Right. So you could inflate prices of goods and services, but many times you're also talking about the money flowing into assets and making those things rise in price.
Okay, so in reality, we're not doing more actual business activity. When they keep talking about, well, this company has record profits, a lot of that is almost a false record profit because it's coming from the inflated dollars that have been pumped into that industry or to that company. Yeah,
when the money is flowing, where is it actually flowing? I mean, if it actually was flowing into the economy, that would end up showing up with, again, rising goods and prices of goods and services, right. And that would end up being, have an impact on things like sales and profits at the company level, et cetera. But because it's flowing into stock prices, you see stock prices rising. Because again, when you do a book like I do, Stock Investing for Dummies, right. People forget that you have the company itself, whatever that physical company is, it's goods, it's services, customer service, employees, the physical company basically.
Right.
But the other side of that is the stock price. You see, in other words, you could have a situation where a company, regardless of how well it's doing, in the short term, you could have the prices rising or falling of its stock.
Right.
In other words, many times people have seen a situation where you have, say, a company not doing well, but the stock price is rising. Other times you might have it where the company is doing very well, but the stock is not rising. Because what really judges the stock market rising is when the money's flowing in and you have more people buying the stock, then you get more buyers than sellers. And sometimes those buyers are who? The Federal Reserve or the member banks of the Federal Reserve. Exactly. So sometimes you have that almost like that a bifurcated picture. What's the reality of the company and what's going on with the stock price, you see? And so long term, good companies do end up having their stock prices, zigzagging upward. But short term, it could be irrational, and sometimes it doesn't always have a good correlation.
So in effect, what we're talking about is a lot of day trading type situation where people are betting on a stock one day, the next day getting in and out with all these micro, fast computer systems that they have but be in and out of a stock quickly. When you have all this money pumped in, that kind of also distorts the whole market picture.
Well, in recent years, you end up finding out that the little guy is not the major player in the general stock market. A lot of the money is flowing through for a variety of reasons, between technology, and a lot of the money is coming from where? Everything from central banks, sovereign wealth funds, Wall Street firms, etc. So you have a lot of money flowing through, but plus, because the technology is there, where with a few mouse clicks you can get in, a few mouse clicks you can get out, so many times you see markets that are more volatile than they used to be. I mean, you have now movements that were really unseen, many years ago. Okay, so now it's a little bit tougher for people to try to outdo the market in the short term. This is why investing for the long term is a safer path to go for people out there who are considering participating in the stock market. And sometimes they participate whether they like it or not. Like when they have a 401k plan, or their company pension plan, those monies are going to be part of the mix as well.
I'm glad you mentioned that, because I find a lot of people have a disconnect. They talk about how upset they are when a company, let's say Exxon, records record profits. They do not seem to realize that their company's stock pension plan owns some of that stock. So if Exxon was not making those record profits, it would have a very bad effect on their individual pension. And I have spent a lot of time trying to point that out to people, and I realize I get a glazed look over their eyes when they do not see the connection between the two.
Well, the interesting thing is that, when I hear people talk about gigantic profits, I mean, what are you really talking about? I mean, for Exxon, you're talking about 9 cents out of a dollar is the profit. And the point is, and if the profit wasn't there, okay, then guess what? You're not going to get your goods and services. What's the point of creating them? You see? So you need the profit there. And like I've told people in my classes, like in my seminars, I said, look, the heart and soul of a company is the profit. If you don't have the profit, then you're not going to be able to run the company. You're not going to be able to hire people. You won't be able to grow the company. You won't benefit investors. You won't benefit consumers. You won't benefit the employees or anybody else for that matter. So profit, you can argue, beside being the most important element of a company, I can make the argument it's probably the most important element of an economy. You show me an economy where they've abolished profit, and I'll show you an economy that's either is collapsing or has collapsed.
Soviet Union, for an example.
Soviet Union, Yugoslavia, it goes back to the Roman Empire.
So in effect, what you're saying is profit is not a dirty word.
Well, understand this. Profit is really the price you pay to make something happen. It's a reward for benefiting consumers, and for running your company efficiently. Now, for those people who say, well, we should abolish profit. Well, then why bother? Why do anything then? Then you have basically a collapsing economy. You can't pay for the government. You can't pay for public assistance. You can't pay for anything. You have poverty for everybody. Is that what you want? I don't think so.
Another point, the official U.S. debt is listed at over $17 trillion. We personally know off the books it's a lot higher than that, but let's stick with the $17 trillion. That amount of debt, how will that impact the average American over the long haul, particularly young people?
Well, understand this. Whenever a government accumulates debt, the point is ultimately somebody has to pay for it directly or indirectly. It's either going to be paid by current taxes or by future taxes or through inflation, which is a way to be able to when the price of goods and services go up, inflation is like a hidden tax. So whenever people say, oh, geez, we have to pay for this debt somehow. Well, when you keep on printing money and getting into more debt, what are you really doing? You're going to create more liabilities later on that somebody has to pay for. And ultimately, who's going to end up paying for it will be the private economy.
Right.
Yeah?
So what you're saying with inflation is it's kind of like a fella who gets a big pay raise, but his mortgage stays the same. So it really benefit him by inflating his salary, but his costs stay fixed, which would kind of translate to the government almost wanting inflation, pay down their debt. I know, Germany right before Hitler took over kind of fell onto that in the 1920s.
Well, it's quite interesting about it, and it's when you relate it to today's situation, because when you think about, for example, the interest rates are very, very low.
Right.
And the thing is, you always have perverse incentives that occur, or perverse effects, unintended consequences. So right now, what you have a situation on, you have massive amounts of debt at many levels, federal, state, local, and now even corporate, college debt, et cetera, and so forth, because low interest rates encourage debt. Right. But the other side of it is that low interest rates discourage savings. And America needs savings, because savings is a natural form of capital formation. When there's more savings in the bank, then you're able to lend it out to the business world, so you can be able to have expansion without hitting into debt. In other words, it's a good, pure form of capital formation. Right. So when you're discouraging savings, you're shrinking that capital base, and that's not long-term good for the economy. But now, back to your point about the long-term situation with this, when you have that kind of massive debt, it's going to have an impact. And for young folks that are out there, look, at some point it's going to catch up with you. You're going to be cursing your elders at some point. But don't curse all of them, because a lot of us were trying to warn, about the situation.
To live within your means.
Exactly. So the point is, when you hear about trying to limit spending, it's quite interesting, because when you're trying to limit spending, it's not because you don't want to benefit people, you don't want to be able to help with the programs. It's that at some point when it becomes unsustainable, then you end up harming the very people, who are the most exposed in this situation. Like right now, you and I talked about this before the program, that in the year 2012, you had a situation when, the first time in American history, when you had the following situation occur. The number of people who are dependent on public assistance or employed through the government, in other words, people who are paid in the public sector, that number has hit 120 million people, and it's rising. But the number of people who are taxpayers who end up carrying this is 15 million people, and shrinking. So when you have more and more people who are dependent and less people pay for it, what happens now? Now, the people who are dependent, in the meanwhile, say, okay, fine, I'm fine, the people in power are going to keep on paying me, etc. But the point is, these people, when the rug gets pulled out from under them, when you cannot sustain it anymore, then those people are the ones who will be harmed the most in the long run. You see? Right. So, like in my seminars, when I teach about investing in business startup, I tell people, especially in today's economy, especially what's going on in the next few years, the more self-sufficient you are, the more you can be able to shield yourself from the effect of third parties, where you have to worry about pensions, how they're inflating that. If you're dependent on federal, state, and local governments, and if those budgets are in crisis, who's going to be the ultimate people who are going to get harmed? The very people who think they're benefiting now. So the point is, those people who are on public assistance, the sooner they can become self-sufficient, the better off they're going to be.
And yet the system is designed not for them to become self-sufficient. The system seems to be designed so as long as a politician will keep promising them the benefits, they're going to get their vote, which means a politician continues to expand every year what he's offering these folks, which ultimately puts us farther behind.
Well, Dave, you're mentioning an article, actually you're referencing an article that I wrote a few years ago called The Fatal Flaw of Democracy, and the point is, we have hit the point where when people can be able to vote themselves in, money from the Treasury, and all the politician has to do is just, listen, vote for me, and I'll get you goodies in some way, shape, or form. They won't say it that way.
But I think a wise man about 230 years ago mentioned that fact, by the name of Ben Franklin, was talking about once they realize the Treasury, they can vote themselves a Treasury, the democracy, a republic is over.
Oh, exactly. And when I think of Benjamin Franklin, if he can get all the legislators out there and have them fly a kite in a thunderstorm, I think we'll be better off.
Oh, I think that'd be a beautiful thing. Anyhow, what do you think about the future of, speaking of benefits, Social Security and Medicare?
Well, actually, this is a reference to your point earlier. When you mention off the books,
Right.
you're talking about,
Exactly.
because people see what's on the books. And by the way, you know what bothers me is even when you see it on the books, what bothers me is that the mass media, even the financial media, just don't do a good job informing people about what the situation is.
Right.
I mean, there's more people in the public who can tell you more about the sex lives of Hollywood stars than they can tell you what the national debt is.
Right.
You see? And if it's a national debt, it's an amorphous thing like Mount Everest. It's far away, who cares?
Right.
So the point we mentioned is the 17 trillion. But when you mentioned earlier about off the books, what are we talking about? When you add up Medicare, future liabilities, underfunded liabilities, Social Security, and some other things that are not counted into the debt, it's not 17 trillion. You're talking about, if you look at one study that was projecting it for the next whatever, how many years, it's really over $200 trillion when you add it all up.
Right.
How the hell do you pay for all that? So you're going to have a day of reckoning. You're going to have a situation when, we don't know what kind of hell will be broken loose and what kind of people, innocent people, millions of people, are going to suffer when that does fall apart.
See, that brings us to how foolish the government is and how people allow it to happen. Medicare, you and I both know, is basically broke. So what do? We put in Obamacare, which will expand Medicare. Originally, you had Republicans talking about doing away with Medicare. The next thing you know, they were arguing, well, but Obamacare will take money away from Medicare. What happened to getting rid of a system that basically is so fatally flawed that it's bankrupt? The only thing keeping it going is Ben Bernanke and the printing presses from the Treasury Department.
Yeah. Well, you can vitiate, or avoid some of this stuff if you do some major things immediately. Like, for example, limiting spending, cutting, you've heard this a million times, cutting the waste, etc. And on the other hand, creating the framework for the private economy to grow enough, because when the economy grows, tax revenues grows, and you can grow yourself out of it.
Right.
But if you're making more burdens on a private economy and it can't grow, it stifles it, then you are going to harm the long-term future. And the other side, if the spending keeps on growing, unrestrained, you're heading toward crisis. There's no way around it. You know what I mean? So, and the thing about when you mention about healthcare in general, what's interesting? I did on my YouTube channel. I did a 2-part video about how economies collapse. And believe it or not,
very good, by the way.
Well, thank you kindly. Yeah, I mean, but I won't win any Oscars. Yeah. But anyhow, the bottom line is that I mentioned that. If all the economists out there who seem to argue incessantly about good and bad, about debt, is it good, is it bad, go back to the basics. You know how basic? Supply and demand. I mean, believe it or not, the thing is this. What does supply and demand mean? In a functioning economy, supply and demand is represented by what? Demand is by consumption.
Right.
We all have demand. What do we want to buy? You know what I mean?
Absolutely.
We want to buy food and vacations, etc. Right?
Right.
So that's demand. That's consumption. But the supply is talking about production, right? A healthy economy has a rough balance between consumption and production. There has to be equilibrium. So the thing is this: government, no matter how you slice it, whether you like it, you dislike it, you love it, you hate it, it doesn't matter. The point is, government is an engine of consumption, and it is a functional burden on the private economy. The private economy carries the public economy. You see, so when the private economy can carry the public economy. In other words, the combination of the demand, and the consumption with the government, and what the government can do, but the private economy can be able to produce goods and services that generate enough revenue and can carry it. There's no problem. But when you have a situation when consumption is escalating and production is being stifled, first of all, how does that happen? Well, when you keep on taxing and taxing production, you're going to get less of it. But when you keep on rewarding consumption, like when you tell, like right now, 120 million people, you say, keep on consuming, we'll pay for you.
Right.
Well, you're going to have escalating demand, escalating consumption. Right. So how do you fill that gap? Debt. Right? Because if you can't fill it in with production, just like at home. If you're producing, working and money's coming in and you're making $1,000, but you're spending $1,200, you have a deficit of $200. Now, how do you cover that? Well, either you produce more to make $1,200 to make equilibrium, or what do? You have to borrow, whether it's credit card or debt or loans. So now what? Now the following month, if you're still in deficit, if you're still over consuming, and you're not producing enough to cover it, now what? Now instead of 1 month of deficits, now there's 2 months of deficit. Now the debt is escalating.
Compound.
In other words, you don't need a genius to see that at some point you're going to have massive problems. And you've seen it constantly. It happened to the Soviet Union, the Roman Empire, Greece. I mean, there's a lot happening right now. A lot of states in the U.S. are heading in that direction.
Right. Well, you see all the time, too. I hear people tell me, well, it doesn't matter because we'll still keep getting money, and it doesn't matter what deficit is because the Chinese will continue to lend us money because who else will buy their televisions? I don't think they realize there's 1.5 billion people in China, and maybe 1 billion of them would like to own a television. That sooner or later, China's going to wake up that they do not need the United States. They'll convert that capital into Chinese currency and keep it within themselves. And we seem to be digging ourselves a bigger hole. And like you said, people look at it as, oh, it's so big, it's too big to even think or worry about. Yeah. The government just ended their shutdown and increased the federal spending. What do you think will be the long-term consequences, and what are your thoughts on that shutdown process?
Well, first of all, you end up finding out that the people who were the most serious about, financial controls and limits on spending, that they, in a political tactical sense, had lost.
Right.
Okay. And again, whether that's good or bad, that's a separate issue. We're talking about from a political sense. The people who were in favor of limiting, or somehow putting some rationality into this financial, free fall, right, they lost. And the people who won, whether that's good or bad or not, the people who said, let's continue what we're doing and let's keep on spending. And the thing is, when you keep on raising the debt limit, see, people have to understand why the debt limit's there to begin with. It's there to be able to basically make all of us, especially the people in charge of the purse strings, to occasionally pause and say,
show some discipline.
Are we spending too much?
Right.
In other words, just like when you have a credit card. If I tell you, look, we're going to keep on raising your credit line. You keep on spending, we have no choice but to raise your credit line. Now, what are you going to do? Oh, my God, you're going to raise my credit line? That's horrible. No, right. The thing is, if you keep on raising the credit line to the point where it's a meaningless thing, what you're saying is, go ahead, spend your heart out. Not a problem, but try to hold yourself there. But no, it's not going to work. So, to me, the end result of all of that, regardless of whether you're Democrat, Republican, or whoever the hell you are, when you look at it from a point of view of just fiscal common sense, you say, holy cow. I mean, things will then seem normal a week from now and a month from now, but you might in some ways now you're telling the folks out there, well, we went to the debt limit. The people who told us to hold your spending, they were beaten up. They were beaten back. They were defeated. That means that next time we go to the debt limit, no problem.
Right.
So in other words, you're creating the impetus, the catalyst for those who are pro spending to continue on that freight train. Right. It's going to be, if it's not mitigated in some way, you're talking about some catastrophic results here.
Well, last year, I don't know if you recall this, but I'll never forget, when he was Treasury Secretary, Timothy Geithner made the comment that, why do we even go through this charade? There should be no debt limit. And it was given serious consideration, which tells you that they have absolutely no discipline, no control, besides the fact that pretty much everyone in Washington is economically illiterate.
Well, I wonder how Mr. Geithner would respond if, he was at home.
Oh, yeah.
And his teenage son came in and says, Dad, what's this point about a budget? Just give me whatever I want going forward. You're only going to be more than anyway. Then all of a sudden they say, hold on a second, that's reckless. Well, you're doing it at the federal level. Why not do it at home, Dad? Show me some love,
Right. And Timmy's given plenty of love, I'm sure about that. So, with the spending, again, we're back to the deficit, the $17 trillion, and we're just going out of control. You mentioned it before, the Roman Empire. People don't realize what the Roman Empire really fell apart was when they hit the tipping point where the majority of people were on the government dole and nobody wanted to defend their borders. So eventually the tribes came in from the north and pretty much ended the Roman Empire as it was known up to that point.
And by the way, that was part of the reason why the Roman Empire was expanding. Because when they didn't have that, remember that shortfall between consumption and production? Right. When they couldn't domestically be able to produce what it took to quell their citizenry,
bring in the outsiders.
Let's go elsewhere and do some plunder there. You see?
Right.
So why? Because they figured, oh my God, if we don't take care of this crowd, they're going to turn on us.
Natives
you
will
know what I
get
mean?
us.
You know, and so the point is, they would have fallen apart into chaos. You see, and then this is how many empires end up dying. When you have to consume beyond your ability to domestically and peacefully be able to produce to cover this, then you're heading into dangerous waters.
Okay, now the magic wand. You are now the grand ruler of the United States. What you say goes. What would you do to right the ship?
You mean after I come back from Disney?
Yes.
Okay.
After Disney.
All right. well, first of all, look, I want to see everybody covered, but the bottom line is, all you need to do is, if you just, first of all, limit spending to, say, even like a modest level, like
now, how would you go
increases.
about cutting it specifically? Because politicians all say that, but what would you really be looking to cut?
Well, first of all, step number one is I would just limit whatever it is. I mean, I would freeze spending. You know, you're telling me what I can do now, right?
You're the commander.
I would freeze spending. I would cut taxes, which would expand the economy. I mean, those are a few things I can give you a long laundry list, but certainly, definitely limit the size of the burden. You know, on all levels, and be able to expand the economy through tax cuts, incentives, etc., and you can grow your way out of it.
Okay, Medicare and Social Security. What would you do? You're the grand poobah. Go for it.
Well, first of all, you're going to have to tell, first of all, current people will have to, that are there, you're going to have to just keep on paying their bills and find cost savings where you can. But people who have a far time frame, say to them, look, we're going to have to wean you into the private sector, you know, and private savings and private insurance, because it's unsustainable. Have that, or you'll have nothing at the rate it's going. You know, some of this is not good or bad. It's just reality, and you have to deal with it somehow.
Now, what would you advise young people in the country right now to think about, to study, where they should think about long-term investment, or what advice would you give them?
Well, here's the thing. As a raving capitalist at my website, I tell everybody, my theme or whatever, you know, I tell people that everybody should be doing wealth building at a two-pronged approach. I mean, first of all, I definitely want people to be as self-sufficient as possible. I'll tell them right now, if you start now, you could be free and be able to retire without Social Security and have the money and be financially independent. But if you go through ignorant and figure that somebody's going to take care of you, you're heading for a wrecking ball. So two-pronged approach: passive wealth building, investing, you know, saving money, etc. And a second prong is start a business and become as self-sufficient as possible, whether it's part-time or full-time.
What businesses, quickly, do you think people should be looking to get into when you say start a business? Anything in particular?
Listen, all they have to do is take a look at the headlines and see what problems there are in society, and that's where they should be running a business. I mean, if there's millions of people who need something, you're filling in that need, you will benefit by serving others. That's the whole point of being an entrepreneur. You make money by helping fill in other people's needs, and it's a win-win situation. That's the whole point about being an entrepreneur.
Paul, we have to leave it there. I really want to thank you for joining us tonight, and I think you gave a lot of great information, and hopefully people will take heed and follow through on some of the things you talked about and start holding their politicians' feet to the fire. Thanks again.
Thank you.
And again, Paul's www.ravingcapitalist.com. Thank you, and have a great evening.